Ja, wir hatten also erstmal Philosophie, dann Ökonomie und jetzt, Sie werden sich wundern, Physik. Einer der renommiertesten Wissenschaftler Ungarns, der jetzt einen Vortrag hält. Und wir wollen jetzt nicht uns mit Physik beschäftigen, sondern der Hintergrund ist, dass der Forschungsschwerpunkt von Imre Kondor die Anwendung von Methoden der statistischen Physik auf Fragen und Probleme des Finanzmarktes jetzt seit vielen Jahren ist, der dort auch eine ganze Forschergruppe hat. Und das verständlich und im Hinblick auch auf die ethische Dimension hier vorzuführen, fand ich, ist eine wichtige Ergänzung. So, the floor is yours.
I'd like to thank the organizers for inviting me for this lecture. And I have to begin with an apology. Excuse me for not being able to speak in German. Also, I'm not a philosopher, not an expert on ethics. So these remarks of mine are based on my limited experience in the industry. I spent a couple of years as Director of Risk Management at the Hungarian branch of Raiffeisen Bank, and partly with interaction with people in the industry and also on my readings. The first is a remark on ethics and morals. My understanding, which is not a very sophisticated one, my understanding is that ethics is a code of conduct of a group or a profession or a culture or something, whereas morals are more personal. It's of course, society has a lot of influence on it, but nevertheless, it is the guiding principles of personal behavior. Now, if you look at any of these professions, like the doctors or lawyers or whomever, who have an institutional ethics, then you can see that there are situations when there is a lot of tension between the ethical behavior and moral conviction, such as a lawyer defending a murderer, for example. But if a professional ethics system is in conflict with generally accepted moral principles on a large scale, then we are talking about a criminal organization. Right? The mafia does have a very strict ethics. Nevertheless, it's not recommendable. Now, also I have to offer some motivation. My interest in this whole subject dates back to a period when Hungary was taking over the international finance regulation, especially the 1996 Capital Adequacy Directive of the European Union. And I found myself in this funny situation that I got involved in the preparation of the law, and also I had to implement it at the bank. So that I had ample chance to dig myself into the regulation, and I noticed a lot of internal inconsistencies. And a large part of my research ever since is centered around these internal contradictions or internal inconsistencies of international regulation and systemic risk and all this stuff. Another input was my trip in 2005 in the US, where I noticed the total madness of the American property market. There were whole streets up for sale. Everybody was busy refinancing. They were buying larger and larger houses, big huge gardens, at totally ridiculous interest rates. So that even for a superficial observer like myself, it was quite clear that this cannot lead to anything but a large-scale collapse. indeed, by 2006, the upward curve of the property prices turned over, and by 2007, a string of threatening events took place, and in 2008, the whole market collapsed. Now, these are, again, completely unprofessional remarks on the self-defeating character of short-term strategies. Social acceptance of the individual requires restraint, postponement of satisfaction, deferral of gratification. This is what we are trying to teach our kids, right? In order to make them acceptable grown-ups out of the screaming little monsters they are at the beginning of life. So now, if you are not capable of restraint or postponement of satisfaction, you are in the danger of permanent conflict with your environment, with your fellow humans, but also you are in danger of harming yourself. Addictions are clear examples of this type of behavior. For a short-term gratification, you take heroin or I don't know what, ecstasy, they call it, and you are destroying yourself on the long term. Now, evolution somehow constructed us in such a way that we are prone to this sort of trap. The neural system is rewarding you on the short term because there was no heroin in the jungle, right? So that we did not have to prepare ourselves to defend ourselves from this type of effect. And once your brain is flooded by dopamine as a reaction to any of these pleasures, alcohol or gluttony or whatever, you fall into this trap, and the withdrawal symptoms are a very efficient penalty. Now, my impression is that money is addictive very similarly. So there is this dopamine surge in some people's brains at the sight of a big heap of money, right? Or at the prospect of picking up a big bonus. Now, at the beginning of the year, the New York Times reported on the case of a hedge fund manager who described his adventures in the industry, and he got cured at the end. And looking back, he was able to provide a very convincing case study of this type of addiction. In today's corporate environment, workaholism is a badge of honor. Right? You are supposed to be proud of having spent 16 hours a day at the office, or I don't know, sleeping on your desk or whatever. This is a totally absurd behavior. As excessive working hours, a stressful environment, lack of free time. I was observing the total destruction of social life for all the people at the bank when I was working. If they married at all, they married among themselves because they did not have any type of social. So, no, it's not a joke. I mean, it was just the fact. Also, I would like to point out that compared with the chimpanzee, people in the industry are slaves. The scientists who are studying the big apes came up with an estimation of the amount of time they spend on survival-related activities. It comes up to be something like 5 hours a day. Otherwise, they are just, monkeying around or socializing or whatever. Now, just take this as a comparison with someone on Wall Street. Yeah? These are overexploited chimpanzees. And also, if you ask these people, what are you doing for a living? I'm making money for a living. Now, this is not a normal answer. If you ask a doctor, what are you doing for a living? He would tell you, I'm curing people, right? And as a result, I am offered some means of subsistence, right? So the upshot is that this type of addiction is self-destructive. Now, where are timescales? Now, when we are talking about patience or self-discipline or whatever, postponement of satisfaction, all these things are tightly connected to trying to optimize, if you are believing in optimization, trying to optimize or at least survive in the longer term in a random environment. So we have to consider the question of timescales. What is the time horizon on which we should try to optimize if we are working in a bank? Now, is it a couple of months until the next bonus? My impression, frankly, was that this was the single most important point. Now, everyone was trying to optimize the next bonus, period. Maybe we would like to optimize on a slightly longer term so that to please the shareholders, or even longer term to ensure the viability of the firm, or maybe to serve the larger society or growth or whatever, or on a really long term to ensure the survival of civilization. And so these things, these different points are mutually contradicting, and you have to strike a balance between the different timescales, well, in order to be able to look into the glass in the morning. Now, decision making under uncertainty is hard. So there is no recipe that would ensure success, but my impression is that there is ample evidence for distraction arising from short-term behavior. All these things are also tightly related to the question of discounting. How do you discount the future? It's well known that people do not discount consistently. It's not the typical exponential type of discounting the future gains, but people prefer short-term gains, and on a longer term, everyone is very hazy, the choice is inconsistent, and more or less everyone is trying to forget about the real long-term consequences of his actions. I think that professionals, investment professionals, should be able to discount properly. If, as they do, if they practice hyperbolic discounting, so favoring the short-term gain, then they are not able to properly account for the present value of long-term projects. This means that the short-term gain will crowd out the longer-term infrastructural or research or whatever related investment. And this is not only my humble opinion, but a report from the Business Roundtable Institute for Corporate Ethics, together with the Chartered Financial Analyst Institute. They note that excessive short-term focus by corporate leaders, investors, and analysts, combined with insufficient regard for long-term strategy, can tip the balance in value-destructive ways for market participants, undermine the market's credibility, and discourage long-term value creation investment. So I think that this is an important point. The question of discounting is very important. On the other hand, the incentives in the industry are stacked against long-term strategies. Therefore, all the incentives serve this type of short-term behavior. Now, again, this is not a privilege of the finance industry. Politicians are playing the same game. They do not have shareholders meetings, they have opinion polls or they have elections, and they are driven by short-term signals. And long-term projects are being pushed aside most of the time. Whereas humanity is facing a fundamental challenge on the long run. So this general culture of short-term is extremely dangerous. Now, these are a few examples from the past few years which serve as examples of ethical violations in banking. I wouldn't like to go into the details because I presume that most of you know some parts of these developments in banking. This whole subprime lending madness, predatory lending, securitization scam. If you think about it, it's quite clear that all those people were driven by gains on a horizon of half a year, maybe. And frankly, it's very hard to understand what they might have thought about the longer-term consequences. Right? So when you make someone fill out a liar's loan contract, it's evident that the guy won't be able to pay the first installment. And yet, you sell it on and you create all this scam. The LIBOR. There was this widespread manipulation of the interest rate. The remarkable thing is that there were rumors already in 2007 about LIBOR being manipulated. By 2008, all the relevant authorities were alerted. So the New York Federal Reserve Board and the Bank of England governor were told about some of the details. The Wall Street Journal published a paper on it. There was a report from the BIS, the Basel Committee. And yet, the whole thing was going on for 2 more years. Again, one is not able to understand what these people might have thought. So it was evident that sooner or later this will go into a criminal investigation. And yet they were playing the same game. Then sanctions violations, money laundering on a macroscopic scale by HSBC and Standard Chartered and some other banks. Again, it was clear that sooner or later Uncle Sam would intervene and would hold them to account. This mis-selling scam in the UK banking, basically all the UK banks were involved in selling products which were, it's just a scam, and it's not even unethical. And there is this quote from Charles Prince, who was the CEO of Citigroup. As long as the music is playing, one has to get up and dance. We are still dancing. The time was 2007. They were still dancing up until September 2008. But let me recall a personal memory of this. At that point, I was not related to Raiffeisen to any degree. Nevertheless, I was some sort of an observer from the outside, and I had some friends working at the bank, and I had a chat August 2008. By that time, everyone should have been clear about that the disaster was impending. And I told the guy, the second in command at the bank, that look, your portfolio, looking at it from the outside, seems to have deteriorated in quality very much. And oh no, that's the Americans, we do not do this type of dangerous things. And yet I insisted that, look, all the signs tell me that you are in trouble. And the answer was almost rhyming with this as long as the music is playing. So, look, you may be right. But if I start giving up market share, Herbert Steppich is at my throat tomorrow. Steppich was the boss of Raiffeisen International. Yeah. In 2013, he stepped down in the wake of a very questionable offshore manipulation in the property market in Singapore. But more seriously, he spearheaded the bank's spread all over Eastern Europe, and together with Erste, they represent an exposure of Austria to the tune of 30% of the GDP in those markets. Let me say a few words about our own work. It's related to risk measures and the like. And my claim is that downside risk measures, so value at risk, which is the widest spread risk measure today in the industry, and likewise, expected shortfall, which is advocated by the Basel Committee, any downside risk measure is instigating short-term behavior. So if you do not put some other constraint on the application of these things, they will systematically encourage short-term behavior. The problem is extremely easy to grasp. You are watching the time series as time goes on, and you are taking a time window within which you are trying to figure out which sort of combination of assets is the best for you. Now, if it happens to be a dominating asset in one time window, an asset which is dominating in the sense that it is providing a larger return at each observation point, then the risk measure is telling you to go extremely long in that asset and go short in anything else. Okay? Now, this, if there are no other constraints like liquidity and what, this would encourage you to take up excessively large positions. This is an instability. Usually, this is mitigated by liquidity considerations, by limit systems and all that stuff. Nevertheless, the instability is still there, and it is still rewarding short-term behavior. We are importing techniques from machine learning in order to systematically deal with this problem. And now that the Basel Committee announced their preferred future risk measure expected shortfall, we are looking into the statistical properties of this new risk measure. Having reviewed all these unethical developments, I would like to offer two positive examples. One is Apple. I mean, I am not saying that Apple is positive in every respect, but there are features of the company which are recommendable. At a recent shareholder meeting, Tim Cook answered a very provocative remark by one of the shareholders. And he said, when we work on making our devices accessible by the blind, he said, I don't consider the bloody ROI, as a return on investment. It's the same thing for environmental issues, worker safety, and other areas that don't have an immediate profit. The company does a lot of things for reasons beside profit motive. We want to leave the world better than we found it. I think at least this line should be spread all over the corporate world. And I'm coming to the last slide. It's about a thrillingly boring Swedish bank. It's the Handelsbanken. It has the following core values: long-termism and decentralization of decision. They've experienced very slow but steady growth for decades. And this growth was based on profits they made, not on credit. So they were building organically. The local branches are empowered to make their decisions based on one-to-one customer relation. So no automated scoring things or liars, loans or anything, but the old style of personal customer relation. Staff has never been incentivized to issue inappropriate products, in contrast to all the British banks. I'm mainly talking about the British branch of Handelsbanken. They have a very strong balance sheet. They were not harmed by the crisis at all. And they were not a target of regulatory intervention. They do not have, this is absolutely remarkable, they do not have any sales or market share targets. So staff is not rewarded for hitting some sort of predetermined target. They are rewarded for the positive customers' feedback. They hardly do any marketing at all, which greatly reduces overhead. I wonder how many of you have ever heard of them. Now, they have a very high level of staff loyalty. There are no bonuses at the bank, absolutely no bonuses at all. But they are accumulating above average profits into a fund from which long-term staff are rewarded when they reach the age of 60. So before leaving the bank. So long-term loyalty is rewarded, nothing on the short term. Now, if you look into the history of this bank, they had higher profitability than the average of their rivals for 41 years in a row. They are expanding over Britain like mushroom, whereas Barclays or the Royal Bank of Scotland are shrinking under the pressure of this capital charge. The BBC made a long report with this guy, Anders Bovin, who is the head of the British branch of Handelsbanken, and they called him the acceptable face of banking. Thank you very much.